VA loan appraisal. What happens if the value comes in low? Hey everyone, thanks so much for joining me. I am Jeff Trevarthen, Jeff the Mortgage Pro, and you are on my YouTube channel, so thanks for visiting. Today we're going to be looking at VA loans, appraisals, and in particular what happens if your VA loan appraisal comes in low. So let's kind of go through what a VA loan appraisal is. So once you get into contract to purchase a property, the lender, hopefully that's me, will order a VA approved appraiser to provide an opinion of value for your home. All VA loans require an appraisal, and it must be paid at the time either by you, the borrower, or by the lender. And the appraiser is going to give you an opinion of value that's based on facts and market data, not just what the seller thinks that the value of the property is, which is what they listed the property at. And then when the appraisal is complete, you're going to get what's called a notice of value, an NOV. That's what a VA appraisal is called, notice of value. And it's going to document the estimated value of the home. It's going to list the comparable sales in the area. It's going to list the floor layout. It's going to show any photos of the property. And then it's going to list any items, if any, that require a repair to meet the VA minimum property standards. So that's what a notice of value is going to be. So what if my VA appraisal comes in below the purchase price? What are my options? So the first one that you can do is do what's called request a reconsideration of value, an ROV. If you feel that the value is less than it should be, you want to ask me, your lender, or the real estate agent that's involved in the transaction to come up with some comparable sales to support our hypothesis that the value is not what it should be, that we want it to be this particular price. And the VA, we're going to take those comparables, we're going to submit them back to the appraiser, who will then have the VA staff review those and help determine that the value needs to be changed. So that's the first thing you can do. You can request a reconsideration of value, an ROV. The second thing you can do is renegotiate the sales price on the property. So the seller may be willing to consider a reduced sales price that is equal to or less than what the appraised value came back with. I've found that this is difficult to do because you said you're going to pay this for the property. And if the appraisal comes in low and you don't want to pay that same price for the property, that doesn't usually make a seller very happy. But that is one of the things that you can do if your appraisal comes in low. You can also bring cash to the closing table. I would say most VA loans that we do are 100% financing. A lot of people do have plenty of cash that they can do that with. So when you're negotiating a contract and you go into contract on a VA loan, we order an appraisal and it does come in low. If you have the ability to make up the difference in value with cash, you'd have to pay dollar for dollar, and you can do that absolutely, especially if you really want the house. So bringing in cash to the closing table is one of the things you can do if the value comes in low. You can also use what's called the VA escape clause. Now, whenever you're doing a VA loan, you want to make sure that this is included in the purchase contract, in the sales contract for any VA loans, and it basically states that you can opt out and not purchase the property if the value does come in low. So you can get things like your EMD back with this escape clause for the VA loans, but not any out-of-pocket costs. So if you've already paid for an inspection or a termite inspection or an appraisal, those are costs that are one-time costs that you cannot recoup if you have to back out of the transaction with a escape clause. But you do get your earnest money deposit back when you're a VA and you're a veteran. And then the last thing you could do is, in certain circumstances, especially if you're buying new construction, you can request what's called a cost approach on the new construction property. And this is simply a different way to evaluate the value of a property based on the cost of replacement to rebuild the property if you were to have to rebuild it again. So this only happens in new construction areas where there are no sales comparables that you have to use. So that's it for today. Hopefully this was really helpful for you. If you have any questions at all, please make sure you reach out to me, and I look forward to chatting with you in the next video. Have a good one.